For more on where the nuclear trade is headed, TD Cowen's Craig Hutchison joins us now. He is the firm's base metals analyst. Craig, great to have you with us. I saw you sort of smiling when Cramer was going off on the end of magical investing. Can you sort of tell us why Cramer's wrong?
Yeah, no, I respectfully disagree, and thanks for having me on the show. I think you got to look at the uranium sector really as a long-term play. The uranium miners, the developers, they're looking to supply uranium for the next 5, 10, 15 years. The market's been in deficit now for 3 or 4 years. We expect it to be in deficit to the end of this decade. A lot of the deficits have been supplied by inventories. We don't see that changing anytime soon. So I think when you look at this space, you really have to take a long-term view, and our long-term view is the market's going to be very tight for a very long period of time. If you think about the Chinese are building 33 nuclear reactors currently. There's obviously, I'm sure we could talk about it, just what's going on in the United States in terms of rejuvenating their domestic industry. But yeah, I think there's still a ways to go for this space, but you have to think about it more on a long-term basis, because certainly the uranium name has been caught up in the whole AI trade.
There have been a number of notable restarts to old mothballed reactor sites. 3 Mile Island is one notable one for sure. Have you noticed that municipalities, the government, that they're really standing to the side, stepping away in terms of allowing this to happen? There's a marked change in sort of the bureaucracy that would have blocked the restart of these mothballed reactors.
Yeah, I think there's been a shift globally towards the acceptance of nuclear over the last number of years. I think there's 20 different countries that have pledged to triple nuclear capacity by 2050. The U.S. is pledging to quadruple it by 2050. So there's a tremendous amount of government support that we haven't seen in the past. I think in the past, the nuclear was viewed more as a sort of dirty source of energy. And now I think in a number of years, it's really been it's been reframed as a green source of energy, stable long-term supply. You don't have the interruptions that you would have with renewables. So I think there is a growing acceptance globally at the municipal level for nuclear projects.
Hey, Craig, it's Tim. I'm with you on both the long-term view and also the long-tail investing. In fact, I feel like we could have been having this conversation back in 2002 or 2004. And one of the things that I've noted from both just kind of as you lay out your base case in there is that we're talking about free market utilities that are buyers. And we're in a world where I get the sense that there, if not now, there will be some free market utility buyers that have to pay whatever they can pay. And this is where I think both the Westinghouse investment in CCJ is really important, but also where I think people just don't have any idea what the squeeze looks like. Talk about that.
Yeah, I mean, there's just growing demand. The hyperscalers are looking at adding, I think, 30 gigawatts of power. They've effectively locked into some agreements with SMRs to kind of deliver that power. Right now, there's just you've seen a big shift in the United States in terms of the power demand, and I don't think that's going to continue here for the foreseeable future. Markets are quite tight, so you're obviously seeing a huge support across the board from a number of these utilities that really need to meet those power demands from the hyperscalers.